topics. So the first topic that, in no particular order, I just know that I've had conversations over the last couple of years with folks about cash versus accrual accounting, and it always seems to be a little bit of a confusing thing. Not so much that it's super confusing, but it oftentimes will get confused with how taxes are done. Okay, so that's really how I want to draw the distinction between what cash versus accrual is and how that impacts taxes. And so that's kind of what I wanted to focus on. But let's just talk at a really, really high level. My goal for these topics is to take 15 minutes max, plus a little bit of time for Q&A. Okay, that's the goal. So just at the highest level, when you go into QuickBooks Online or QuickBooks Desktop and you've got your reports, you've got your financial statements, right? And the primary statement that we're really talking about here is the profit and loss statement, right? So when I look at the profit and loss statement for any given period, it's going to show me certain things. Okay, and let's see if I can run this for a specific time period and have it show something, not showing anything. Okay.
You're gonna give it to a client, like a certain client.
Yeah, what I tried to log into the trial, whatever you call it, yeah.
The practice one.
This is one of those.
One.
Yeah, this is one of those QBO stupid things. So I'm recording, right? Okay. So are you all familiar with the QBO test drive? Okay. If you're not logged into your Intuit ID QuickBooks Online, or if you go into an incognito browser, you can go into what's called the QBO test drive. So this could be a separate topic on its own. But if you just Google QBO test drive, there's a link there for the test drive of QuickBooks Online, kind of like a little trial account, effectively. But you don't have to sign up for anything. You don't have to register for anything. You just scroll down and it says, okay, hey, there's a QuickBooks test drive here. And there's one for just like normal QuickBooks Online. And there's also one for QuickBooks Online Advanced. I'm just going to do the basic one here. And you just have to say you're not a robot. And then it should, if I'm lucky, it'll let me in. Okay. All right. So in this QBO test drive, it's just got sample data. What's cool about this test drive, by the way, is you cannot break this. You cannot mess it up. You can go in and delete stuff. You can add stuff. And when you close this test drive and you reopen it the next day or the next week, it's completely refreshed. Okay. So it's kind of a cool place to just go play. Hi. So in this, which is what I was trying to show you, is I'm just going to go to the standard profit and loss, which will now have sample data. And I just want to kind of talk about the basic concept. Okay. So first off, in QuickBooks, there's, when you run a P&L, you can run it on a cash basis, or you can run it on an accrual basis. And there's an
Are you sharing your test drive screen?
It should be, but if I'm not, let me try. Thank you. How about now?
Yes, I can see now.
Okay. Yeah, that would have been helpful, right? So what I did before when you weren't looking is I went to Google and I just said QBO test drive. And there's a link there for the test drive of QuickBooks Online. And once you click that and scroll down, there's a link here and it actually loads an instance of QuickBooks Online with sample data. Okay. So that's what I did. Okay. So when I'm in QuickBooks, desktop and QuickBooks Online, it's pretty much the same here. I can run a P&L and I can run it on a cash basis, or I can run it on an accrual basis. So first off, what in the world is the big difference between those two? The difference primarily is accounts receivable included, or is accounts payable included? Okay. So on a cash basis, what we're really talking about is income I've actually been paid for, expenses that I've actually paid. Okay. So if I enter an invoice for $1,000, but I haven't gotten paid yet, that would not show on a cash basis, but it would show up if I ran the report on an accrual basis. If I entered a bill from a vendor for $1,000 for rent. On an accrual basis, it would show up, but on a cash basis, it wouldn't show up until I've actually paid the bill. Okay, that's the big picture concept. What's also unique about QuickBooks, and I think it is actually unique to QuickBooks, is that you can flip back and forth anytime you want. Okay, I could run a P&L on an accrual basis. Great, boom, done. I could run it on a cash basis, hit the run report, and it's done. And it will just reflect income that I've been paid. It'll reflect expenses that have been paid as well. And so when QuickBooks, I can toggle that back and forth all day long. One day I could run it this way, another day I could run it that way, no big deal. And there's also an accounting setting. I haven't looked at this lately, but I assume it's under accounts and settings. There's a basis in there that you could say, hey, this is what I want to always, run my reports on. And I would assume it's under advanced, but yeah, there we go. So under settings for advanced, there's the accounting method. So I can actually go in here and say, okay, I always want to run on this basis or that basis. Okay, and that'll just set the default. But even after I set the default, I can still toggle back and forth. So the key concept here is that QuickBooks doesn't care. You can run it on this or run it on that, no big deal. The reason why this sometimes becomes a topic of conversation is because some clients will say, but I'm on a cash basis or I'm on an accrual basis. What they're typically meaning is how they file their taxes, not how they run their QuickBooks. Okay. And again, and by the way, just if anybody has any thoughts, comments, disagreements, please do share those because you guys are in the books every day with clients too. So, but what the key here is in QuickBooks, I can toggle back and forth as many times as I want all day long. Okay. But when it comes to taxes, once we file taxes on a basis, okay, whether it's, we file it on a cash basis or accrual basis, you don't ever change it. You don't ever change it, right? Unless there's a legitimate reason and your CPA is saying you have got to have a solid reason why you're doing this. And again, you don't flip back and forth on a tax basis. You stick with what you do, okay? Now, again, there could be some circumstances where a CPA would say, okay, that's how you've been doing it, but we need to do it differently going forward. But that's going to require amended and restated tax returns. It's not just a thing that you just decide one day to go do, okay? There's consequences to switching that, okay? So that's one of the key distinctions. And so if I'm always filing my taxes on an accrual basis, that doesn't mean I can't run QuickBooks on a cash basis all day long, but at the end of the year, when it's time to file my taxes, I need to be running those on an accrual basis, okay? Or let's flip that around. Let's say I always file my taxes on a cash basis. I can still run my financials in QuickBooks on an accrual basis, but at the end of the year, I need to do some sort of accrual to cash reconciliation. And again, that's not something we typically as bookkeepers would get involved with. That's something that the CPAs that are doing and the tax preparers are doing. They would say, well, let's go look at last year's AR compared to this year's AR, and let's do an adjustment, or not an adjustment, but let's record something on the tax returns that shows the difference, the change. Okay. Or, hey, last year's AP was this year's AP is this. Let's record an entry on the tax return to show the change, because that actually affects the tax return. Okay. So that is big picture. There's a couple other things that affect, cash versus accrual in QuickBooks. And I think inventory is one of those. So in other words, and by the way, everybody correct me on this one, because I'm about 80% confident on this statement. But my understanding, inventory, that's an accrual basis thing versus being a cash thing. So if I look at for example, a balance sheet. So if I was to go run if I pull up a balance sheet here, and balance sheet standard, okay. So if I run this on a cash basis, notice I still have literally cash in the bank, okay, and undeposited funds. But if I run it on an accrual basis, I also see the accounts receivable showing up and also the inventory asset showing up. Okay. So there's some nuances there, but typically inventory shows up on accrual. And subsequently, if somebody is asking us, hey, should I be on a cash or accrual basis? I would ask the question, are you talking about how you manage your day-to-day accounting? Or are you talking about how you manage your tax returns? Because again, this is not just a waffle back and forth option. Okay, talk to your CPA on how you file your taxes. We don't do that. But if they're managing inventory, typically they're going to be on an accrual basis. Okay, just in general, they should be on an accrual basis. One other comment I think I had on this, there's probably other things that affect cash versus accrual, and but I think like general journal entries, are those cash or accrual based entries? Anybody know? Cash. Okay, so it's a good distinction, right? So if I'm doing a journal entry, is that going to show up on an accrual basis or is that going to show up on a cash basis? Okay, so we just need to know that as a concept, I guess. So any questions on any of that? Does this make sense? Anything need to be clarified? Anybody have any alternative thoughts or experiences?
I have a question that I'm just trying to understand. I have a client who takes deposits, puts everything prior to the date of service in an unearned revenue account, have to journal the revenue as of the date of the event, all this stuff. And his taxes are cash basis. So, like, generally, you shouldn't really be working with unearned revenue accounts and all that kind of stuff. So, what would be the point of operating your QuickBooks on an accrual basis and doing all of these unearned revenues and journaling as of date of service and all of this kind of stuff if you're just going to file your taxes on cash basis anyway?
It's a great question. I can answer that. I can answer that one of two different ways. It could be that they're filing cash basis because they see that as some sort of a tax advantage. Okay, like for example, and since this is a recorded line, I won't call out any specific.
Right.
But some clients have a goal of minimizing what they report as revenue. Okay.
Yes.
Because that ultimately affects how much they're going to have to pay in taxes. And so, if I do $1 million job that I haven't been paid for, do I want to pay taxes on that $1 million? Or do I want to wait until I've been paid and then I pay taxes on it? Okay. So on an accrual basis, I would pay taxes on it from the moment I record it. Whereas on a cash basis, if I've only received $100,000 out of that $1 million, I'm only going to pay taxes on the 100,000. So there could be a legitimate reason for saying, well, I only want to file taxes on a cash basis because generally speaking, I get paid well in advance of the project getting completed. But I don't on that. But generally speaking, and I think this is a pretty accurate statement. When it comes to QuickBooks and financial statements within and just like how I operate day to day, accrual basis is a more accurate method of accounting. Okay. Because it has the whole picture, not just what I've been paid. Okay. Because if I invoice for $1 million, I mean, let's just assume I did the work. I've earned $1 million. And so it would be accurate on a P&L to show on an accrual basis that I've made $1 million. Whereas if I did it on a cash basis, it wouldn't know anything about that 100,000. So if they're doing any type of entries to account for unearned revenue or anything else, it's probably because they've had some accountant or CPA or tax preparer in the past that has said you should be doing this. It's not something they probably came up with on their own.
Yeah, it's just bizarre to me that you would put that much effort into accrual base in your accounting software and then just basically throw it all out the window and be filing as cash. Like, it's bizarre to me that you would, because that's a lot of effort that goes into making sure every month everything is recorded exactly, based on when the event takes place and all the unearned revenue entries. And then like at the end of the year, it's just kind of like, just kidding. It's all cash basis anyway.
Well, and and quite frankly, I mean, there may be again, maybe specific reasons why an accountant would say, "I want you to do this." Like booking those revenue entries. But if you just if you run it on a cash basis, it would show that you've got the money, and it would I gotta say, effectively do exactly the same thing. But it would be the simpler way to do it is just run the P&L on a cash basis, even though normally you're on an accrual. Because again, you can.
Right. Yeah.
But
I was just curious, like,
go ahead.
no, I was just very curious as to why you would go through all of the effort to do all of these different unearned revenues and all of the different journal entries to book the revenue
Yeah.
and then just kidding.
Yeah, you've got some interest, very interesting clients. But it's probably a CPA of some sort that said, "I want you to do this."
Yeah, the business wants it this way, the CPA wants it this way, and
Yep.
you run the books one way for the year, and then you
Mhm.
pull reports a different way at the end of the year.
Yeah, and quite frankly, it could be a CPA that doesn't understand how QuickBooks works, and they just said, "Oh, well, in my accounting system, this is how I always did it, so this is what I want you to do in your accounting system." Not necessarily realizing that they can just flip back and forth and see it in either way.
There's also a cash liability reason. So, for example, let's say you bill someone $1 million, right? And they haven't paid you yet. Well, if you do accrual-based accounting, you are doing taxes on that $1 million, et cetera. Well, let's say in February of the next year, they cancel the contract and they never pay you. Yes, you reverse that tax liability, but you've already paid, 20% on taxes or whatever.
Mhm.
And you might recover some of that through the years, but for the most part, yeah, you're out that tax money.
Mhm. Yep. Very true. So one of the things that we'll, talk about on a future topic is an accounting concept called the matching principle. And that's like matching in terms of a reporting period, like when you did the work, when you earned the money, when you got paid. Clean accounting would help you, would suggest having the income and expenses in the same reporting period, like when you did the work and how much it cost you, and the revenue in the same month or quarter. Makes it a little bit easier to manage those kind of flows. But sometimes we have clients that have these massive projects that are like that, where it's 6 months or a year before. Home builders, it's a pretty common thing, right? Like I've got these expenses that I'm accruing over a 9-month period to build this thing, but I still might not sell it until 6 months later, depending on the market. So yeah, those are normal things for certain industries. Cool. Was this helpful? I mean, does this clarify anything? Is this good stuff? Yes, no?
Yeah, no, I actually didn't even consider the difference in like how we would consider like cash and accrual versus what the client is talking about when they bring it up. Like, because I tend to get pretty stuck on semantics myself, and I'm sure my concerns for a client's books are probably a little bit more granular and than their concerns for their books, which is typically, do I have income and do I owe any taxes?
Right. Yep. Well, and so those are good conversations to have. Again, especially if a client is bringing it up, it's like you're asking me about cash versus accrual. Like, are we talking about your taxes stuff, or are we talking about how you're just running your business throughout the year?